Well, I appreciate it. Yeah, I'm Jason Stolz, Director of Sales at Diversified Insurance Brokers. We are a general agency in the Atlanta area, and we specialize in a number of things. On the life side, hard to place life cases, long-term care and disability, and also on the annuity side, indexed products and really any annuity product out there that's a fixed product, not variable, but fixed products. We specialize in that as well. And today we have Scott Pope. He's the regional sales director at Legacy, who is going to explain one of what I think is a few different products that are very competitive as far as accumulation, and a couple niches on the death benefit side that I think you'll find interesting. So I hope you find it helpful. And Scott, carry away.
Appreciate it, Jason. Thank you. And thanks everybody for joining us today. Again, I'm Scott Pope with Legacy Marketing Group. Legacy Marketing Group, in case you haven't heard of us, we are a third-party product provider, and we work with a couple of different carriers to give them fixed indexed annuities. And as I said, and I'm located outside of Lincoln, Nebraska. We had about 17 inches of snow hit us on Monday. And so as soon as we're done with this, I'm going to go back outside and shovel, get some more. That's just kind of what we do here this time of year. So that's all going on. But I want to make sure, Jason, everybody can see my screen okay that says Myfit and Diversified and all that, correct?
Yep.
And let's switch to the next slide here. There we go. Things we're going to cover today. Why are we looking at the quality of the carrier? How important is that in today's marketplace, especially with everything going on in the world? You got to make sure you're working with quality carriers. And that's all we do here at Legacy. We work with a couple of very, very strong carriers. And then going to be adding a third here coming up in the next few months or so. And then we also we are almost exclusively dealing with fixed index annuities. But we're not going to go through and make this a product dump. That's not what today's presentation is supposed to be about. We want to show you a couple of different niches and a couple of different features inside our index annuities and focus on those and why we've seen those to be so important, dealing primarily with a long-term care supplement coverage and then also a death benefit guarantee inside a fixed indexed annuity. So those are the three topics that we're going to kind of hit today. Jason does have the question and answer portion open. So if you have any questions, raise your hand. He can stop me and we can help cover some of that. But first of all, let's talk about the carriers and the quality of the carrier. Obviously, everybody is dealing with COVID right now. That's why I'm in my basement. That's why Jason's at his place. That's why everybody's doing it. It's the world we're in right now. In 2009, though, we had the swine flu pandemic. In 57, we had the influenza pandemic. And go back to 1918 was the Spanish flu pandemic. All of these things affected us, dramatically in the industry. What was here at that point? Well, that was both of our carriers. Both of our carriers have outlived all the pandemics. Emeritus, again, outside of Lincoln, Nebraska, 1887 was founded with Emeritus. Americo, which you can't see the slide, Americo, there we go, Americo, who's our second carrier. They were part of Great Southern Life in 1909. So again, both of those have outlived the pandemics, both very, very strong. You're looking at Emeritus with an A+ rating, strong A+, obviously A with AM Best, and they've got all the assets that you're looking for to help support and to be there when you need them. What good is a carrier if they're not there when they need you? And if you go through it and if you look at it, both Emeritus and Americo's renewal rates, I think that tells a lot about a carrier as well. Emeritus and Americo have done a very, very good job of maintaining renewal rates. So they do it the right way. You go back to Americo, and again, AM Best, A+, part of over 100 years of experience. We are going to be adding a third carrier coming up here in April, and that is Western and Southern. And so that's all exciting for us here at Legacy Marketing as well. The reason we have two carriers though now with this, the way we've designed our product portfolio, Emeritus is our income products. Americo is the accumulation product, both fixed indexed annuities. Don't need a Series 6, et cetera, to sell these, but we are available for both income, that's Emeritus, Americo, accumulation. And that's what we want to make sure that you're aware of. So we're going to focus right now on the Emeritus products. What we have available, Flexmark is probably our hottest seller right now by far. We're seeing that coming through the door at a record pace right now because it is guaranteed income. That's the design. That's what it's built for. Income Mark is the other emeritus product. It is designed for more of it's the stacked product. It's the non-guaranteed participating in the marketplace to get your income base figured out. We're seeing that a lot. We're seeing a lot of it with the Flexmark. Again, we had some of our largest months ever. In fact, January this year is coming through with Flexmark. But it's not just the income. Because I could go through and give you all the rundown on the different indices available and all these different things. But what Flexmark offers is a base GLWB. It's a no cost upfront. You get the 3% growth guaranteed. It's not sexy, but it doesn't cost you anything. It's for the client that is looking at an accumulation sale, but they may want to have that guaranteed income on the back end. It is what it is. But what we're seeing, the majority of what we see coming in includes this Myfit income rider. It's for an upgrade of 1.05. We actually did just have to raise the rates on that a little bit just in the past month. And that actually tells me a lot about between legacy marketing and emeritus. We didn't want to throw out a rate that we couldn't maintain. It's going to cost you in the long run. So they actually did just upgrade to 1.05 for the cost of this rider, but it is a 7% guaranteed roll-up compounding for up to 10 years. So you've got your accumulation bucket and your income bucket. The income bucket is going to grow at a 7% roll up. It's available after 1 year. You can start the income and you can start it again after 10 years or so. But emeritus really fits into best if you're doing a 10-year or less. So if you've got a 60 weight 8, 60 weight 9, 60 weight 10, that's where the income rider really shines and does its best. But the focus of today's conversation, we want to make sure is the Myfit income rider with the booster. The booster for an extra 10 basis points. Remember, if you go back, it's a 1.05 for the rider charge for just the Myfit income rider. You add this booster, another 10 basis points is all it is. You end up getting a rider that is based off of doing activities of daily living. The Myfit, I can't bathe, dress, transfer, toilet continence, or eating. You can't do 2 activities of daily living. What it will do is then it will double the income, as long as there's money in the accumulation bucket. So if your client was getting $1,000 a month, in simple terms, they can't do 2 activities of daily living. We receive a letter from the doctor stating they can't do 2 activities of daily living. They now can get $2,000 a month. And you would continue to get that advanced income until the accumulation bucket is down to 0. Once the accumulation bucket, you go into the guaranteed phase and we go back to your original $1,000. So the client can't really lose on this, but they're going to be doubling their income if they can't do 2 activities of daily living.
Scott, I have a quick question on that.
Yes, sir, Jace.
What if they come into the product, they can't qualify for traditional long-term care maybe, but they come in not the healthiest person to start with. Can you explain how that might work? I see there's a 2-year wait, so that, is part of it.
That's the only real caveat to that whole thing, Jason, is there's a 2-year wait. You can't actually turn the income rider on at all until a year, but there is a 2-year wait. And I guess one of the things
you don't have to qualify on the front end either.
No, there's no qualification on the front end. The only thing is they can't really be in the nursing home already.
Yeah.
That would be the one thing. But if they are, the beauty of this rider and the beauty of a lot of the what I try to point out is it's care anywhere. You don't have to be in a nursing home. This could be the one thing that help keep the client at home, is if they can double their income, they can now afford to bring in a nurse. You can afford to pay the sister-in-law or brother-in-law to come in and help, to help mom or dad during that time.
A ramp.
All of these things. You can build the ramp. You can put the grab bars in. You can do all the things that help you. I call it age in place, and which is the most important thing. People really, truly want to age in place. I always use the example as my father was 92, just passed away recently, but he was in a care home. We could have used this to help keep him out of the care home. It got to the point where, he needed so much more care than just my mother could give. And there was nobody there to help. We couldn't afford to bring in the nursing and everything. This would give them the opportunity to age in place. So that's the beauty of this. You don't have to be in the care home to trigger this. You do need to every year requalify. Again, that's just a doctor's letter saying, hey, They still can't do 2 activities of daily living. This is also for single life or joint annuitants. So if you're on a joint annuity payout, all of a sudden let's say the male of the couple can't do the 2 activities of daily living, we double the income. He passes away. It goes back to the single payout until the wife can't do 2 activities of daily living. And then now you can double it again. As long as there's money in that accumulation bucket and you're not in the guaranteed withdrawal phase, you can double with this booster. And again, for only 10 basis points. For 90+% of the policies we're seeing coming in the door that have the Myfit income rider are including this extra portion of it for 10 basis points. It's almost a no-brainer to do so. That's on Flexmark. Now again, Flexmark is that 7% guaranteed roll-up. If you've got a client, oops, I do want to mention also Flexmark does do a payout, lifestyle payout. If actually will give you a little bit more money earlier on in your life until you may have other sources kick in later on. We're not like Social Security or whatever it may be. So if you got a 60-year-old, turn it on, they can have it for 7 years and it actually will go back down. You get a little more money up front. Not seeing a lot of this because once a client, if they're doing the guaranteed payout, they want to know exactly what they're going to get. And that's what we're seeing. I mean, at least on our end, this lifestyle payout's nice to talk about, but we're not really seeing a lot of people maximizing it or taking advantage of it. But Income Mark is the other product that Emeritus offers and that I mentioned. It also offers the My Growth Income Rider. This is a 95 basis point charge for the rider. 2% annual compounding up to 10 years plus 250% of the policy gains for 50 years. So if they earned 3%, you would get 3% times 250. You end up getting 8.5 there or 7.5 there plus the 2% compounding. So you get 9.5% return. It really boils down to does the client want guarantee, or is the client looking at participating in what the marketplace has to offer? 1 year wait for the income on this as well. Must be at least age 50. And there's an increasing payouts as well available. But you can add that same rider, that booster on again. And we go back to activities of daily living, bathing, dressing, transferring, toileting, continence, eating. Doesn't cost, I mean, you cannot be denied of this as long as they're not in the care home already. It covers each person. You do have to wait 2 years. That kind of takes care of that situation you mentioned there, Jason. And again, it's the same Myfit income booster that is out there. We are seeing this being brought in, and a lot of people, that's why they are buying these income products with us, is so they can add this type of booster onto it. It helps offset when the client needs their money the most. We want to give that to them. We want to make sure they have the opportunity to use that type of thing. I'm never promoting this as a alternative to long-term care coverage. I think long-term care, and it's proven in my own family, is very, very important. This is a supplement to long-term care. Because long-term care, trust me, those policies do not cover all the needs. This would be the opportunity to go in and do this and to double that income for only 10 extra basis points. I guess I'm going to stop. Jason, was there anything you had, any questions you had about, or anybody have on the Income Mark or Flexmark, and really why we're seeing this as successful as we have been?
I don't see any on here, so no.
Okay, we'll keep going then. So we're going to switch from living benefits to death benefits. We work with Americo, Classic Mark, Liberty Mark are two. The stalwarts. Classic Mark is basic, I call it your butt basic annuity. Not a lot of moving parts. It's the one that's out there for your older clients. Liberty Mark is a little more aggressive. You have options to buy up your fees, buy up your rates and participation rates, etc. But what they both offer is what we want to talk about is the Heritage Maximizer. For an extra 30 basis points, you get 30% of the accumulation value is going to be included as part of a death benefit. If you have a client who wants to put their money into a very, very safe, because this is a guaranteed, you got 100% guarantee built into the products with Americo, plus they get 130% of the full accumulation value as part of their death benefit. We are seeing this, that's what this play is really coming into play. The 30% can be used to help offset any taxes that might be out there. 30% could be used to help spread the death benefit out to the different heirs. No underwriting, zero. It's available as a lump sum payout. and it's leverage, and so you can leverage it without limits. If the policy grows to $1 million, you get 1.3 as part of the death benefit because of the 30% increase on the accumulation.
So I have a comment on that. So this one, the other one is more like living benefit related. This is more death benefit related. Another example, say you have someone you have difficulty getting through underwriting, something that it could be a chronic condition, maybe like HIV, something you can live for years and years and years, but generally it's also very tough to get through underwriting too. That would be something to, not a life insurance policy, but it's got the 30% of the accumulation value to, a death benefit, instead of having to get a life policy or not being able to get one. So it's an alternative for some people.
Exactly. And so where I kind of said the living benefits really weren't an alternative to long-term care, they should be in addition to long-term care. This actually can be used as part of a alternative to a life insurance policy that they may not qualify for. This gives them that opportunity to at least give something extra to their beneficiaries.
I mean, if you want it if you don't need it now and you plan on it when you pass away, similar to a death benefit for a life policy, I mean, that's a good, can't get it, you can get that. So,
we see a lot, and a lot of people, and I'm searched true in Texas as it is in Nebraska. A lot of people have money sitting in CDs, or they have money just sitting in an account. And you ask them, what are you doing with that money? My money, my idea is to give that to my kids. Great. Would you like to give your kids 130% of that instead of just the money you got buried in your backyard? Here's that opportunity to do so. Yeah. That's the truth. Or not even your kids, give it to whatever beneficiary may be, the charity or the church or whatever it may be. Why, if you've got this lump sum of money sitting there that you want to give away to them, why would you not give them an opportunity to get more? Is that a fair statement, Chase?
Yeah, no, absolutely. Yep.
So the Heritage Maximizer, for 30 basis points, you get an extra 30% built into it. But I want to talk a little bit, I think even a little more spin on that is the other product that we have available, and that's the Future Mark with Americo. Again, it's a little more, it's kind of in between. You can actually buy up, you get different fees, you can get different indexes and all of that, but its death benefit is unique. Its death benefit are for the clients who may need to take withdrawals during their lifetime, because the other one is an accumulation based. This one is actually based off of what you're going to get, whatever gain you have grown, you enhance that as part of your death benefit. And we'll go through an example here in just a second. So typically, most of them are enhanced death benefits are through an accumulation value, similar to what we just talked about with the other Americo product. But this one is not. It actually bases it off of what has been credited. So if you have a client that, let's just say, had $100,000, the policy has now grown to $225,000. Here's my math. And then they take out 150. Your client would have 50 still in their accumulation bucket, plus that original 25% of the gain. That doesn't go away. So as a death benefit, your clients would have $75,000. That 25%, once you have earned it, even if you've withdrawn all the gain, they still have that as a benefit. I think that's unique. I think it's different. It's issuable up to through age 85. It gives the clients a chance to, participate in the marketplace, to really push it, be a little more aggressive, possibly knowing that you're going to get 25% of that gain is going to go back to your beneficiaries no matter what, even if you withdrew it all. So you could take the money, go buy the Winnebago after they, whatever they may be, cash out what they want, live life, and knowing they're going to give their clients, their beneficiaries, 25% of the enhancement. A little bit different, a little bit unique. I think that's a neat strategy, and we are seeing some success with that as well.
And that's on the on the gains, not necessarily.
No.
Just can you clarify on that again? So it's 25%. The other one was 30%
of the accumulation value.
Accumulation.
Of the accumulation, so the total amount. So if you had $100,000 sitting there, you'd get 130 as a death benefit.
Okay.
Here, this is 25% of the contract gains will be considered as part of a death benefit, even if you withdrew those gains.
So if you put in 100,000, you've earned, say, 30,000, whatever 25% of 30,000 is,
it's yours. That
would be tacked on top.
That'd be tacked on top. Even if you took that 30,000 out, you'd still have that amount sitting there. It's still going to be there as a death benefit. as long as the policy's in force, as long as they don't drain it down to zero.
Yeah.
Leave $5,000 in, you know you're going to have that amount available as a death benefit. Again, different strategy, but this gives the clients, you know, the chance to know they're always going to have something left behind as a death benefit, even if they've had to withdraw it all. Now you may be saying the challenge we all run into is how do you show all this? And I apologize, I'm zooming over here to this. Are you seeing? Did I change screens, Jason?
I lost it too. Let me see. It's got the slider on the bottom with the future mark with Benny Booster. Yeah.
What I want to do is just run a quick video. This is a client approved video, and we're trying to come out with more and more of these as we go to really let because I know you're out there in the marketplace, not being able to see clients like we used to. The handshakes aren't happening right now. What can I do to help recruit? What can I help to try and bring in some clients? We've got a bunch of videos out there. Here's one that happens to be on the future mark, which we just got done discussing with the Benny Booster. I'm going to go ahead and play it.
After decades of hard work and saving, retirement is your time. Time to relax and enjoy quality time with friends and family. Take items off your bucket list and create unforgettable memories. You've earned the right to enjoy the fruits of your labor, and that shouldn't keep you from leaving your loved ones a substantial legacy when you're no longer around. So what if there were a way to enjoy your retirement to the fullest and leave more? FutureMark Fixed Indexed Annuities, issued by A-rated Americo Financial Life and Annuity Insurance Company, include Benny Booster, a uniquely structured death benefit rider that allows you to take withdrawals or required minimum distributions from your retirement savings while maximizing the legacy you leave behind, enabling you to enjoy the retirement of your dreams and provide for those you love. Benny Booster issues through age 85 without the inconvenience of a medical exam, making it an excellent option for people who can't qualify for life insurance. Plus, it has no waiting period and can shield your beneficiaries from the delays and hassle of probate. Available at no additional cost, the Benny Booster benefit is fueled by the strong earnings potential of FutureMark, a product that provides powerful minimum guarantees to protect your financial future, even if the market declines. Discover the first rider of its kind to credit on money that has already been withdrawn, and enjoy the retirement you deserve, all while building a meaningful legacy for your loved ones. Ask your insurance professional for more information about FutureMark with Benny Booster today.
That right there was a minute 50 is all that was. It's available that you can, show that to clients. Is the client approved? And it kind of went through and broke down the Benny Booster that we just got done discussing. You can email those out. We have a number of those, again, client approved type of videos that kind of shows the niche. So go through your list of clients. Let's figure out which ones this may fit and just say, hey, I've got an idea for you. Watch this 2-minute video, then give me a call if it's something you're interested in. It's a simple way to try and keep things moving forward in this time of COVID, et cetera, et cetera. So that is what I've got. I assume you guys are seeing my, it says questions. Is that what you're seeing now, Jason?
Yeah.
Okay. Perfect. Do we have any questions?
I don't see any.
Jason, do you have any questions for me?
No, we work with you guys pretty frequently, and I actually learned a couple things that I didn't know. So I know there's not a lot to it, but it's just different, but in a good way though. So if you do have any questions, the main thing to keep in mind that I think is, like you mentioned, not an alternative to life or any living benefits like long-term care, but to coordinate with what they may already have, or if they can't qualify, then that's an option too. But we've been very happy working with you guys, and the sales team is top notch. Yes, I'll tell you that right now.
Yep.
Yeah.
Say one thing. You mentioned, again, if a client's sitting there and they're a little concerned to dip their toe a little bit into the marketplace, the index annuities are the way to do it because you can't lose. I call it zero is your hero strategy, where you're going to get, the worst you can do is zero. But what with the Americo products actually has a 1% guarantee on 100% of the money that you put in. So even after 10 years and the market is a negative, your client has still had gain during that time, up to 110% during that time. So 1% for a 10-year gain. It sure beats sitting the money sitting in a CD or wherever it may be, because you get all these extra, you get the death benefits, you get all the different things you can add into it with an index annuity, and you've got all that upside potential by being involved in the different indices that we have available. So
yeah, two good companies. Yeah, very good. So we've been happy with it.
Good. If we don't have any questions, Beth, are you still with us?
I had one on the chat, the Q&A, but I answered it. It was, Charles had said good information. Thank you. So thank you, Charles, and everyone else. So yeah.
And Jason, how can they get a hold of you so you can set up a contract with Emeritus and Americo?
My phone number is right there. It's 404-488-3481. That's my cell phone. Working from home, it's pretty much always available. So. And then my email is also there, jason@diversifiedins.com. I check that middle of the night sometimes. So, always there.
That's one of the strong points and the weaknesses of working from home now.
Yep. Yep. So, but no, I really appreciate it, Scott.
Definitely.
Beth, yeah.
Beth, anything you'd like to add?
No, thank you guys so much for doing this. It was a lot of great information, and we recorded it, so it will be sent out to everybody who registered, and we're actually going to put it on our video on demand on the website as well. So people will have access to it. But this is great information, and we appreciate the support of Diversified and Legacy. So thanks so much.